Hi everyone, welcome back to Digital Expert. So the former US President Donald Trump has returned to the White House and Indian markets have been showing some mixed reactions. While we saw a bit of a dip today, the optimism is high, especially in the technology sector. There is a hope that the Trump's pro-business stance could inject fresh momentum into the US economy, which would benefit global trade and investment. So the expectation is that the Trump's economic policies would fuel the spending and growth in the US, which would benefit sectors like technology and electronics manufacturing. So in this video, let's dive into 3 Indian stocks that could gain from this new focus on the US growth and trade. So don't forget to subscribe to this channel and do share my videos. So let's get started. The first stock we are going to discuss is from the electronics manufacturing sector. So Indian electronics manufacturing sector is a hidden gem, the potential for multi-bagger returns in the next 5 to 10 years. So today, the electronics are the backbone of numerous global digital revolution from AI to IoT to electric vehicles, 5G and more. So several factors has positioned the Indian electronics manufacturing market as the world's fastest growing. So this stock is a leading end-to-end IoT solutions enabled EMS company. The market cap of the stock is 36,967 crores. The stock I'm talking about is Kainos Technology. The current price of the stock is 5,739 rupees. Kainos Technology is well positioned to benefit from the Donald Trump's presidency, given his pro-India and anti-China policies, which align with the company's strength in electronics manufacturing. So the Trump's victory could amplify the China plus one strategy, which could encourage global companies to diversify supply chains away from China and increase opportunities in countries like India. Kainos Technology is a prominent leader in the Indian electronics manufacturing and is strategically situated to capture this redirected demand, which is particularly in the electronics manufacturing service sector. As an end-to-end electronics manufacturing company enabled with IoT solutions, Kainos has a solid foundation in the electronic system design and manufacturing services. So this company's expertise covers key sectors such as automotive, industrial, aerospace and defense, IoT and IT industries. This is likely to grow under the Trump administration that favors partnerships outside China in line with America First policies. The company is well equipped to scale production in high demand areas like smart meter, consumer electronics and aerospace, enabling it to meet the needs of an expanded client base effectively. And it has a robust order book which exceeds 30 billion, which is slated for execution over the 18 to 20 months. So Kainos Technology has a growth trajectory which is very clear. The Kainos Technology's strong engineering team and innovative product offerings would increase its capacity to scale and respond to the increased demand driven by the political change under the Trump's administration. Kainos provides conceptual design, process engineering, integrated manufacturing, and life cycle support for major players in the automotive, industrial, aerospace, defense, outer space, nuclear, medical, railways, IoT, IT, and other segments. Kainos expertise ranges from prototyping to product realization, which includes mass manufacturing, which ensures a seamless and efficient manufacturing process. Kainos also offers a wide range of solutions, including smart metering technology, smart street lighting, BLDC technology, inverter technology, gallium nitride-based charging technology, and IoT solutions for smart consumer applications and devices. The price to earnings ratio is 155.71, higher than a sector peer ratio of 90.09. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 9.13%. In the September quarter results, in comparison to the previous quarter, Kainos Technology has reported a revenue growth of 13.52% and 18.57% increase in the profit. The revenue also increased 58.55% year on year and the profit also increased by 86.35% year on year. The next stock we are going to discuss is an electronics manufacturing company. This stock has been leading the electronic manufacturing service space in India. This stock is behind one of the India's most innovative consumer durables, lighting and mobile phone solutions. This company is a market leader and a key player in the India's manufacturing landscape. The market cap of the stock is 93,911 crores. The stock I'm talking about is Dixon Technologies. The current price of the stock is 15,583 rupees. Dixon Technologies is a leading name in the electronic manufacturing service sector since 1993 and is well positioned to benefit from the strong foothold in India's electronics manufacturing landscape and its strategic emphasis on the semiconductor and electronics. The company's diverse product range spans from consumer electronics, home appliances, mobile phones, CCTV, LED TV screens, and as the largest LED TV screen manufacturer in India, Dixon collaborates with global brands such as Samsung, Xiaomi, Panasonic, OnePlus, Philips, and Havells, enhancing its presence in the growing electronics market. So when Donald Trump returns to the office, potential shift in the global supply chain could be catalyzed, and especially with his prior stance on increasing tariffs on Chinese imports by 60%. So this shift would encourage the companies to seek manufacturing alternative outside of China, making India a favorable option. As a top EMS provider in India, the Dixon Technologies is well positioned to meet the rising demand for high quality, cost effective manufacturing solutions. The increasing trend towards China plus one supply chain strategies and aimed at the diversification makes Dixon a key beneficiary due to its robust manufacturing capabilities in India. With focus on manufacturing electronic components and leveraging the government incentives, Dixon is all set to capitalize on the semiconductor boom. So Dixon Technologies operates across various segments from LED TV, mobile phone, lighting products, even medical equipment. Their extensive range covers everything from consumer electronics to security system. So Dixon Technologies is India's largest homegrown design focused solutions company. So Dixon has a 17 manufacturing units in India. This company's Make in India phones are being not only used to cater to the domestic market but also globally, and this is a big development for the company and the country. Price to earnings ratio is 131.31, higher than its sector peer ratio of 90.09. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 24%. The next stock is a Chennai-based engineering and design company that was incorporated in 2004. This company specializes in electronics manufacturing services and provides integrated services and solutions to original equipment manufacturers. Their services range from initial product concept stage to volume production, which includes concept co-creation, product realization. They specialize in precision manufacturing for various end-use industries. The market cap of the stock is 10,106 crores. The stock I'm talking about is Sirma SDS Technology. The current price of the stock is 562 rupees. So Sirma SDS Technology is a prominent electronics manufacturing service provider in India, and this stock would benefit significantly since the Donald Trump has returned to the White House, and this is due to the anticipated global economic shift from his policies that might drive, especially in the product design, engineering, printed circuit board assembly, box building, and testing. The Sirma SDS serves a variety of industries, including consumer, electronics, automotive, industrial, IT, railways, and healthcare. If Since Trump has returned to the power, his policies are expected to further promote the decoupling of global supply chain from China, leading to the increased manufacturing demand in regions like India. So, as companies are diversifying their production away from China, this stock has a robust electronics manufacturing capabilities. So, this stock is well positioned to meet the demand with proven expertise in consumer electronics and automotive. So, Sirma SDS is a prime beneficiary of the China plus one strategy. The company has shown financial strength, boasting an average return of 16% year on year and the return of capital employed at 21.1%. Sirma's leadership in RFID tech product manufacturing in India strengthens its ability to tap into the rising demand for automation and digitalization across sectors like supply chain management, retail, and logistics. So, the company's financial target for FY25 is forecasted to be a 40 to 45% increase in the revenue and also EBITDA margin of 7%. Sirma SDS Technology serves a various range of industries. Their product portfolio includes printed circuit assemblies, RFID products, electronic and electromechanical parts, motherboards, and memory products. They have 3 dedicated R&D facilities. So that geographical revenue distribution is 70% from India, 6% from USA, 14.5% from Germany, 9.5% from the rest of the world. The price to earnings ratio is 95.33, higher than a sector P ratio of 77.26. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 6.45%. If you like this video, don't forget to subscribe to this channel, and thank you for watching.